We'll wait a little bit until everybody joins. Great. So, good day to everyone. I'm really happy that everybody is here today. We have a good attendance here and on YouTube as well. And I'm really happy that we have such great speakers today to talk about our issue of trade finance and gender. Yesterday, we celebrated International Women's Day. And I must say that a day actually is not enough, especially if you're looking at the following. 268 years to close the gender economic gap, 136 years to close the global gender gap. So these figures show us that there is still deep-rooted discrimination against women, and this is obviously perpetuating. Giving women equal rights and opportunities, I think, is the only way to change this paradigm. And I truly believe that actually trade can help. This is why actually we're all here today, to see how trade can help. So I would like to welcome all of you for the first Think Up of the year organized by the WTO Gender Research Hub. And it is a pleasure to see all of you today. Throughout 2022, we will be organizing a series of similar discussions looking at research on trade and gender, while also understanding the concrete issues women face on the ground. So we bring two worlds and two perspectives together to have a fuller picture on how trade works for women. Today, I would like to thank all our speakers that gracefully agreed to share their knowledge and experience with us. And in particular, I would like to thank and welcome two of our most esteemed ambassadors at the WTO, Ambassador Valencia from Ecuador and Ambassador Beckers from the Netherlands. In the first part of this program, they will talk about what governments are doing to support women, to support their access to finance and access to opportunities created by trade. They will also explain how research can help them as policymakers to design sound measures close to women's needs. Of course, I'm not forgetting our other speakers today, Nathalie Lua, Director at International Finance Corporation, IFC, Nadia Asham, she's a trade policy expert at the African Trade Policy Center at the United Nations Economic Commission for Africa, UNECA, and she's also a hub member. And Agnes Gito, she's a trade finance consultant at the United Nations Economic Commissions for Africa, UNECA. These speakers will share with us their research, expertise, and experience in the part 2 of the program on trade finance. Of course, I'm not forgetting our dear friend and hub member, Teresa Carpenter, who will moderate the second session. So as I said, today, we will talk about financing change, trade finance to women's entrepreneurs rescue. And without further ado, I would like to give the floor to Ambassador Valencia for the first keynote speech. Ambassador, you have the floor.
Muchas gracias, señoras, señores, estimados amigos. Me referiré en mis palabras a la importancia de la investigación y la generación de datos sobre comercio y género, y cómo desde el Ecuador vemos a estos elementos, esta generación de información, como una herramienta útil para apoyar la igualdad de género en el comercio. Quiero empezar, por cierto, por manifestar mi agradecimiento a Angush Devagoshan, presidenta del Centro de Investigación sobre Cuestiones de Género de la OMC, por la invitación a que yo participe a nombre de mi país en este panel. También es un gusto compartir la pantalla con el embajador de los Países Bajos, mi colega Paul Beckers, así como con los investigadores e investigadoras de varias instituciones, funcionarios del Centro de la OMC y otras personas que nos acompañan de manera virtual en este evento. El informe del Banco Mundial, La Mujer, la Empresa y el Derecho 2022 indica que aproximadamente 2.400 millones de mujeres sufren cierta forma de desigualdad en cuanto a oportunidades económicas a nivel mundial. Un número increíblemente grande. Las barreras que impiden a la mujer el ejercicio pleno de sus derechos en el ámbito económico se erigen por prácticas discriminatorias, culturalmente arraigadas y muchas veces institucionalizadas, como bien lo sabemos. Fruto de esas barreras, es innegable que con frecuencia las actividades económicas y el comercio tengan una significación diferente para las mujeres y una distinta para los hombres, que las mujeres deban enfrentar retos adicionales como trabajadoras, emprendedoras o innovadoras. La acción de los gobiernos es clave para promover equidad de género en lo económico y comercial. Que la OMC, en el marco de su Plan de Acción sobre Comercio y Género 2021-2026, impulse el levantamiento de datos estadísticos desagregados, aporta a que los países miembros contemos con una herramienta cuantitativa muy útil para consolidar la más efectiva perspectiva de género y así diseñar también efectivas políticas públicas que faciliten la participación de la mujer en la economía y en el comercio. Permítame brevemente referir la experiencia en este sentido del Ecuador. La Agenda Nacional para la Igualdad de las Mujeres es un instrumento central de nuestra planificación estatal y va en línea con el Plan Nacional de Desarrollo. La agenda permite orientar la gestión del gobierno en materia de igualdad de género. Para su implementación, se está ejecutando diversos programas como Economía Violeta, que ha permitido llegar a miles de mujeres con créditos en condiciones ventajosas a fin de facilitar sus actividades productivas. O el proyecto Mujer Emprendedora, que facilita también líneas de financiamiento en apoyo a micro y pequeños emprendimientos de mujeres, tanto en el ámbito urbano como en el rural. La población femenina en la economía no doméstica se ha incrementado sustancialmente en el Ecuador. La población económicamente activa creció en un 80% entre el 2001 y el 2010, con gran participación de la mujer. Del total de establecimientos registrados en el último censo económico, el 48% tiene a una mujer como dueña o gerente. Eso suena importante, casi el 50% de participación, pero es una cifra que no nos dice toda la historia, que no nos presenta todo el panorama, y de esto el Estado ecuatoriano está extremadamente al tanto. Es menester contar con una desagregación de estas cifras, con datos adicionales que den una idea más cabal de las características de las actividades económicas de las mujeres, de los retos que enfrentan y de las barreras producto de una discriminación y dinámicas de desigualdad que tienen años de historia. Para el Estado ecuatoriano es muy claro que la solidez de datos socioeconómicos permite el desarrollo de diagnósticos más precisos sobre la situación estructural de las mujeres en el ámbito comercial, así como la evaluación del impacto de las políticas que se implementen. Como muestra de ello, es oportuno que recuerde que en septiembre de 2021, Ecuador se sumó al proyecto She Trades Outlook del Centro de Comercio Internacional. A través del mismo, aspiramos a contar con una herramienta adicional con miras a identificar de manera más precisa y sistemática las brechas de la participación de la mujer en el derecho. Estimados amigos, Ecuador felicita y anima el trabajo que se ha propuesto el Centro de Investigaciones sobre Cuestiones de Género de la OMC, ya que propicia un espacio de intercambio y discusión para abordar uno de los principales vacíos a los que nos enfrentamos en esta tarea. Estamos seguros que la labor de investigación del centro contribuirá adicionalmente a alcanzar los objetivos planteados en el marco del Grupo Informal de Comercio y Género de la OMC, particularmente en la recopilación y análisis de datos que puedan ser utilizados en la definición de políticas comerciales que desde nuestra organización puedan promover la igualdad de género. Muchas gracias por su atención. Buenas tardes.
Thank you, Ambassador, for sharing with us your perspective on these issues. And as you said, data collection is a key tool for policies to address the women's needs in terms of equal treatment in trade. I would now like to give the floor to Ambassador Beckers for his keynote speech. Ambassador, you have the floor.
Well, thank you very much, Madam Chair, for your kind words, also for the introduction. You can hear me?
I'm sorry, we have difficulties hearing you.
Okay. It should be okay. Can you hear me? All right.
Yeah.
No? No?
I'm listening. Yeah, no problem. I'm hearing.
We can hear you, but it's very far. It looks like you're speaking from very far.
All right. Okay. Hold on. Okay. Can you hear me now?
Yes. Yes.
But I have to speak out loud, right?
A little bit, if you don't mind.
No, that's fine. No, because it is on mute, so it should be okay. But I'll speak loud. It's my own iPad that I'm looking at right now, but that has a good sound connection. Just wave at me when something's not right or when I'm not loud enough. I'll do my best. Okay, well, what I did say, I just wanted to say thank you to you for your introductory remark. You're very complimentary. Thank you for that. And I'm very honored to, you okay? Because I can see you as Madam Chair. Yeah? Okay. Well, I'm just honored to be the keynote speaker and adding to Ambassador Valencia as my co-keynote speaker. Thank you. Yeah, it's a great opportunity to speak at this very first and important Think Up session and the launch of the World Trade Organization Gender Research Hub. I would like to stress two things. One is, first, trade policy matters. And secondly, knowledge is power. They're related, but they're also separate. Let's talk about trade policy matters first. The work on gender and trade policy is relatively new. Now, women's economic empowerment with topics as access to finance for women and equal rights has been a long-standing priority of the international development community. But the link between gender and trade policy only gradually gained attention after the Buenos Aires Declaration on women's economic empowerment at the margins of the 11th Ministerial in 2017. And that was mainly because trade rules are in principle gender neutral. The common thought, my thought, was therefore that it was irrelevant as a policy area to achieve gender equality. Now, the recent recent research work done by the World Trade Organization and the World Bank has clearly showed, with the existence of so-called pink taxes, that we were wrong. Trade policy does matter. So how ignorant was I? And I was not the only one. We learned that, for example, sectors in which women are overrepresented are confronted with higher tariffs than other sectors, especially in agricultural and textile sector, which of course is, and that's not in my notes, basically ridiculous. Now, I turn to the knowledge is power element, because now we know this, now we have the information, we can move to action. The success of this action will depend on data and data analysis. We all know that knowledge is power, and how true is that? It is important to know the effects of our multilateral, our regional, and bilateral trade rules. That way we can maximize opportunities and mitigate negative effects. Now here comes to the core of my argument. What action is needed? I'm convinced that it's important for every country to fully integrate gender in its trade and development policy. And I'm supported by a lot of science and research on this. Well, actually, we do this in the Netherlands, at least we try to, and we're making progress. The Dutch government has intensified its focus on this. Women's economic empowerment is fully integrated in our Aid for Trade programs. And we think there are 4 pillars, 4 that are important. First, we support the UNCTAD E-Trade for Women initiative. Why? That is to advance digital opportunities for women entrepreneurs. Because, and that's the first pillar, access to digitalization is key. Second pillar, the trade facilitation West Africa and the trademark East Africa programs support women cross-border traders to access markets, to sell products and increase their income by lowering trade costs, less red tape, and less harassment at the border. So the second pillar is access to markets. Third pillar, access to finance, also very important. For example, and I think many of you have heard of it, the Boresha Mama Cash transfer, which is implemented by Trademark East Africa. What is it? They support cross-border women traders whose businesses were negatively affected by the COVID-19 pandemic. The program offers small, unconditional grants, which is max €50 per person, to more than 1,000 female traders. And on top of that, the beneficiaries receive business and financial skills training to improve their competitive and resilience. Madam Chair, just to check, am I still okay on sound? Good, thank you. We go to the fourth pillar, the last one, access to knowledge. Let me explain. Women are often excluded from trade and market opportunities as they endure regulatory policy barriers or even face simply gender-based discrimination. It happens. By strengthening grassroots organizations under the Fair for All partnership, we strengthen participation and leadership of women in trade and value change. Women's groups are trained on policy, on negotiation skills, and market and price analysis, so they benefit from trade and advocate for more inclusive trade policy. So to summarize the 4 pillars to make women's economic empowerment really work, 4 pillars: access to digitalization, access to markets, access to finance, and access to knowledge. Now I'll conclude. The lack of gender awareness in trade policy obstructs women economic empowerment. Knowledge is power. I repeat that. I therefore strongly support the importance of the Research Hub. Now we can move to action. And I'm happy that there's an informal working group on trade and gender in the WTO that acknowledges the difference it can make for women. I'm confident that the Research Hub will play a core role in this. And to conclude, I look forward to the upcoming WTO Ministerial in June, where I expect a broad group of members will confirm their commitment to gender and trade through a joint declaration. And I trust MC12 will provide us with another step forward towards women economic empowerment, simply because we need it. Thank you, Madam Chair. Back to you.
Thank you, Ambassador, for your very insightful thoughts. Actually, I think you're right. Knowledge is key. Our knowledge is important, but also women knowledge of trade and how to trade is also important. So I'm really happy that you highlighted that. It's also very true that the Buenos Aires Declaration of 2017 was a key milestone in the, I would say, in the history of the WTO even, when it allowed the issue to be brought into the organization and to be actually institutionalized in the organization. So I think that was a key milestone for us. And the new declaration that members will adopt at the 12th Ministerial Conference in June will be also a major milestone as well. So I would like to, yeah, absolutely. So I would like to thank you both of you, ambassadors, for your thoughts, and we will circle back to them in the second part of the program when we will discuss current research on trade finance, but also we'll circle back to the third part of our program, which is really looking more at the concrete aspect of how trade can help women. And we will have in the third part two really amazing speakers. We will have Sonia Kelly, Director of Research and Advocacy at the Women's World Banking. Sonia, welcome. And we'll also have the voice of a woman entrepreneur. She will share her experience on the ground. And this is what it's all about also. It's not just about research. It's also about how we can learn from women entrepreneurs and women in general. And so I would like to welcome on the third part of this program, Francisca Ochieng. She's the CEO and founder of L'Héritier Skincare. So that's for our speakers today. Before we start with our more substantive program, I would like to outline the work of the WTO Gender Research Hub this year, and to actually explain why the hub exists. Actually, well, why the hub was created at all? Well, first of all, it was created last year in May, and the idea was to create a platform where experts and researchers on trade and gender could share information. Could also a platform that could also foster research partnerships, bring visibility to the work done. When I started to work on this issue a while back, I was always struggling to find papers or publications. Often they would come by chance, and so I was thinking we need to have some sort of a one-stop shop where we can share these research, these findings, and also understand things from each other. And so this is why I thought we should create this platform. And so the ultimate goal is also to show that the issue of trade and gender is actually a recognized field of research, expertise, and policy action. So for this purpose, and among other things, the Hub has developed a trade and gender research database. I would call it again a one-stop shop where you can find research findings, papers, publications. There is everything for everyone. Everyone is shopping for a paper on trade and gender. It's on the database. We have almost 100 publications as part of this database. We are short of 4. So if anyone is interested to share their published papers with us, you are more than welcome, and we'll send you, we'll put you the email address where you can send us your papers. We just need 4 to reach the 100. So you'll be, you're most than welcome. Yes, thank you, Lolita, for sharing the link. We have published the database on the WTO website. And so I think, this could be quite a useful tool. So who we are, who is the Hub, who is behind the Hub? So we have about 35 experts from various international organizations, regional organizations, from universities, from WTO chairs programs. And so from also all sorts of different regions, going from Latin America to Africa to developed countries, as well as Asia, Europe, and North America. So we are almost all economists and lawyers. That's not a surprise. But actually what we are is that we gather on average about 30 years of experience and expertise on trade and gender. So, this is the heavy stuff here. So I would like to also briefly talk to you about our annual work plan. We are working on the basis of an annual and overarching theme. And this year, the theme is recovery. And I think it fits perfectly today's world, because we live actually in a multi-crisis world. We are facing these crises in health, food security, climate change, and so on and so forth. And women actually are at the centers of each crisis as agents of change and of resilience. And we thought that the theme was really appropriate to answer this world's turmoil. This year, on the basis of this overall theme, we are going to organize 2 other think ups. one in July, one in October. So please stay tuned. We will communicate on those in the next few weeks. But these sort of discussions will lead the way to the World Trade Congress on Gender, which will be held at the WTO on 5 to 7 December. And what is this Congress? This is the very first Trade and Gender Research Conference that has ever been organized, ever. So we will actually organize a Congress every 2 years. And this year's theme, as you can imagine, is entitled Gender Equality for Sustainable Trade and Recovery. We have just issued yesterday a call for participation and papers for the first edition of this World Congress. And all of you are welcome to share with us your papers, whether they are published or just about to be published, so that we can include you in the program of the Congress. These papers actually must be submitted by the 30th of May this year. So there is a deadline ticking. So I would say get to your pens and papers, or maybe shall I say to your keyboards and screens, and start writing. Thank you. Maybe before I finish this presentation, I would like to give the floor to Teresa Carpenter, who is going to take over the moderation of our discussion today. Thank you all.
Thank you, Anoush. Thank you for inviting me to moderate the remainder of this Think Up. But first, my congratulations to you, Anoush, for having brought this to fruition. It's under a year that we've been discussing the hub. It's under 6 months that we discussed events. And now we've got a program of events, which will be 4 events per year, this year culminating in the Congress that will take place in December. But before then, we have a series of Think Up, of which this is the first one. Think Up is a brilliant name. My congratulations also to Anoush, because it was her idea to combine research, which many of us are very familiar with practical elements, which those of us that were initially involved in the hub were not necessarily as aware of really what goes on in the ground. And this was Anoush's insistence that we would have this joint element of research and practical elements. So this one, the topic is on trade and finance, and I've been asked to give a definition of what we mean by trade and finance. So if I'm sharing my screen and making that big, what is trade and finance? I'll only take 2 minutes for this. I received several definitions of what people mean by trade and finance, and they vary slightly. So I'm just going for the very simple definition for people who may not be as familiar with this. If you know about trade and finance, you will know that it's a highly complex definition as what's involved, what's included, what's not included, where to draw the boundaries. If you don't know about trade and finance, but you know either about trade or you know about gender, and you're starting to learn about the overlap of those, you may not be familiar with trade and finance. So my simple definition from Wikipedia, I'm only going to take the first couple of sentences because we already learned something. So basically, trade finance comprises the financial instruments and products used by companies, we can come back to that, to facilitate international trade and commerce. So there we are. It's about money facilitating international trade. Now, the second sentence from the Investopedia definition tells us trade finance makes it possible and easier for importers and exporters to transact business through trade. I think there were 2 interesting words there. It makes it easier. That's great. It's facilitating trade. But it also says it makes it possible. That means in the absence of trade finance, trade may not be possible. Just from this very part of the definition, we can immediately learn that there may be many potential transactions that are not happening because of lack of access to trade finance. Just as part of the definition is often provided by a third party such as a bank. I'll just come to the next part. So why is trade finance needed? In one word, risk. If you're going to trade across a border, if you are the exporter, the seller, your concern will be when, how will I get paid? If you're the importer or the buyer, you want to know, when will I get my goods? If I pay in advance, how do I know I'm going to get them? Now, these things may also be concerns at domestic level. If you go into a shop, you hand over cash, you've got your goods, you don't think about it. If you buy something by credit card, there is a series of regulations behind that, but it's often well regulated for domestic transactions. If you've ever bought a big thing like a car or a house, you will also wonder, at what point do I hand over my money? At what point do I hand over my goods? At international level, that's much, much more difficult. Of how to get the goods across the border and the money across the border doesn't happen instantaneously. Therefore, you need these complex financing mechanisms to take care of that, basically to mitigate the risk. And international trade also includes additional inherent risks that could be the non-payment or non-delivery, which would be much more difficult if you have to pursue that across a jurisdiction, currency fluctuations, or political instability. And with that, I finish sharing my screen. So that's my basic, simple definition. Trade finance is quite simply ways that you can mitigate the risk when you are buying and selling across borders. I know it's infinitely more complex than that for the experts, but in case anybody wasn't sure what exactly we're talking about. You may have heard of letters of credit, you may not, and if you know about trade finance, you'll know about much more. So that's enough of the introduction. We turn now to our speakers, and I'm going to start with Natalie. Natalie, you've been doing research on the trade finance gap faced by women entrepreneurs. Can I ask you, what made you want to investigate this topic? What motivated you? And tell us about your findings.
Thank you, Teresa. That's a very interesting question. And before I start addressing it, I would like to thank Ambassadors Valencia and Beckers for highlighting the importance of this topic. And I would also like to thank the WTO for organizing this discussion forum. So there are many reasons for us to study the trade finance gap for women. And we want to present to you some of the work we've done. There are billions of women, business leaders all over the globe who are working really hard to achieve their dreams. And they face obstacles that threaten their growth and even sometimes their subsistence as a business. So we, IFC, started a program over 10 years ago to channel more financing to women-owned businesses. At the time, there wasn't much data about this segment of the business at all. But since then, IFC has mobilized and invested over $3 billion for the benefit of women-led SMEs. And we delivered this financing through our financial institutions partners, which are in over 60 countries. In 2015, we also considered the needs of women in the insurance sector. And we set up a program supporting the development of specific products by insurance companies targeting the needs of women. So every time we looked at a new business line, we supported our work by specific research to understand the needs of these businesses. And so we did not wait for the research that I'm presenting today to start serving this business segment. We have developed a specific program for supporting women, and the way we do it is by encouraging banks to increase trade finance to women-owned SME entrepreneurs in emerging markets. We have a network of over 200 banks in 75 countries, and we want to increase trade finance to women, importers and exporters. So trade is extremely important because it's directly linked to the economic growth of a country. So providing access to goods is needed for development. And sometimes when these goods are essential, it's really important to be able to sustain these flows and encourage financial institution to provide the financing. Because really, the entrepreneurs we want to serve have the opportunity to contribute to lifting their countries out of poverty. So the anecdotes we have collected and the early data that we have seen both suggest that trade finance access is very fragile for women-owned or led businesses. So we started this research effort because we don't exactly know how big that gap is, and we don't understand why it is here. Why is there a gender gap in trade? We see that emerging market banks are sometimes passing over opportunities to serve this group, and we don't know exactly why. So we expected informational asymmetry, and we knew that there were other factors contributing to this gap, but we wanted to have more data to get more precision on what the issues are so we can solve them better. So again, strategic action is always most successful when focused and supported by market intelligence. That's what we're looking to do. So the problem really in the gender gap trade finance is defined in the box to the right. We are aware that there is a trade finance gap, but actionable data on the magnitude and the key drivers for the gap is disaggregated and incomplete. On the supply side, business leaders and bankers often fail to value the segment's full market potential. We've seen this all through the years that we've looked at women businesses. There is a little bit of a lack of credibility, which is unjustified. So some barriers for women-owned businesses are really unique and unresolved. So this research seeks to answer two key questions. The first one is, what is the magnitude of and the barriers that drive the trade finance gender gap, and how can trade finance providers promote greater gender inclusion in this space? So the research objectives is to drive actionable insights that quantify market opportunities and address specific and unique barriers that block the connection between trade finance supply and demand. Essentially, the objective is to present a high-level value case to the private financial sector, to identify and prioritize the key barriers, and to propose specific recommendations. There are two guiding research themes. Okay, you see here the two guiding research themes that we are focused on. One, the dimension of the trade finance gap, what we call the magnitude, and two, the barriers to trade finance access and solutions. Within these two research themes, we're mapping the status quo on both supply and demand side, and we come up with specific recommendations to promote private sector action on both sides. You see the space for that on the far right column. So let me describe quickly our research approach. We have a 5-step research approach, ranging from a comprehensive literature review on the left to both supply and demand interviews and surveys. And we end with quantitative modeling or extrapolation on the far right. If I move to the next slide, we would like to highlight to you that we have focused on 6 countries. And this is always a difficult exercise, but we're looking for countries which can help us extrapolate to have a near global emerging market view and to connect to markets with a material number of women-owned businesses. So we have selected in Africa, Nigeria, and Kenya. In Asia, we're focusing on Bangladesh and Vietnam. And in Latin America, we're focused on Honduras and Brazil. So keep in mind that our focus is very much on emerging markets. And we believe that a detailed study on 6 countries will help us extrapolate to have an assessment of the whole emerging market view. So we have done some work that I would like to walk you through, at least give you the preliminary findings. So our findings have confirmed that there are information asymmetries, but it has also provided a few surprises. Going into the research, we did anticipate a gap in information between the supply side banks and the demand side. However, this gap has proven larger and also more complex and multidimensional, even more than expected. And you can see an example on this slide. On the left, a women's association refers to bankers' prejudice with women entrepreneurs, given their concurrent household responsibilities. That's despite the fact that over 20% of formal businesses are owned by women in that country. And on the right, you can see that around 80% of the banks are taking this segment seriously. They are investing a great deal in women-focused programs. We see banks launching programs for women, even accommodating those family dynamics, but unable to grow because the women entrepreneurs struggle to provide the information needed for the financing to be extended. We note, however, that these efforts are not targeted towards trade finance, rather consumer debt and basic line of credit. And if you remember, this is how IFC started its efforts toward women, is by supporting lines of credits to women-owned businesses. So now we see that there's more work that needs to be done on trade finance. And while we understand that both viewpoints have merits, these findings shine light on the complexities of such asymmetry. So now, moving to the next slide, we'll give you an idea of our preliminary findings. Several other themes have emerged in our research early stages, starting with the box labeled number 1 on the left, where we describe that alternative funding channels are common. Women-led businesses report using alternative channels and products that do not have the benefit of trade finance instruments that Teresa described, which are very secure and very well known and regarded by financial institutions. So what happens is that results in higher rates of suboptimal cash flow management. The second thing we are seeing is that one size fits all for trade finance transaction request drives, and it drives inefficiency in the market. So banks use a standardized process, regardless of transaction size, which is driving inefficiency, relatively high cost, and extensive documentation perceived by women as barriers and not helping them. The third finding is that gender disaggregated data is rarely tracked by banks. Gender disaggregated data is essential to define baselines and to track improvements in key metrics like rejection rates, risk performance, and pricing. But few institutions are recording gender ownership of businesses. So the first thing we ask a bank when we start working with them is whether or not they are able to identify women-led businesses in their portfolios. And most of them are not able to do that. So generally, that's a first step that we take. We help them identify this gender information. Number 4 is that financial institutions feel responsible for their role as developers of women-led businesses. Many banks have invested in comprehensive and specialized programs to target women business owners. However, these programs rarely include trade finance, focusing more on working capital and general business training. So we see that there is now a need to develop more specialized programs, which can be expanded to include a trade focus. And it would mean targeting these women who often have personal accounts, but bring them to have business accounts, which is based on transaction behavior, more education on trade topics. What Teresa described as basic understanding of trade is required. It needs more dissemination so that there's a better understanding of what the trade instruments provide in terms of protection and ease of doing business. There's also, support that needs to be provided to navigate customs, to work on collateral, free or reduced, for loans that are earmarked for trade finance. And then finally, on the far right, you can see that banks are seeking for greater support from DFIs. So requested initiatives include additional advisory support for marketing, targeting, dedicated funding lines, and new products, such as risk sharing, where we or other DFIs could provide some support so that the bank can go into new business segment and be protected on the risk side. So let me close by just highlighting that the IFC trade finance team is already taking action to bank on women who trade. We offer a fee discount to incentivize the emerging market client banks to bank on women in the trade finance space, particularly women-led SMEs. And since the inception, which was only 3 years ago, the total volume traded under this program is more than 110 million. Please keep in mind that we started by talking to banks who were not able to identify what business they were doing with women. So it may not seem as a big number in terms of the needs, but it's still progress, because as soon as banks start to have gender in their focus, then they are able to develop their programs. And so the first thing is to provide them the tools and the incentives to identify their business with women. We plan to do more, and there's more to come rising from specific findings of this research. And we look forward to continuing to collaborate with all in this meeting to generate a world-changing number of, we want to generate a world where trade is accessible to women as much as possible, so that, because we believe that women can do trade in a lot more in successful ways. Thank you.
Thank you, Natalie. We do believe that women can and should do trade in many more ways. I think you've given us a great overview of the complexity of the issues in understanding the gender gap in trade finance, and you have completely convinced me that there really are plenty of potential trade transactions that are currently not being made possible because of the absence of trade finance. So thank you for that, and we look forward to learning more as the research develops. We now turn to Natalie and Agnes, two colleagues from the United Nations Economic Commission for Africa. Nadia and Agnes, you've been working on trade finance for a while now. I wonder if you'd like to tell us what motivated you to do this research, and tell us what you've been finding, and what was it that made you start in Kenya?
Thanks,
Yeah.
Teresa. I'll just share my screen as well. Okay, is that all right? Okay, perfect. Thanks, Teresa. I think it's great. Thanks for having us at this event as part of the WTO Gender Hub, and it follows very nicely from what we've just spoken about. Because our research, it was motivated by something similar, in that we were finding that there is a gap between the services that were provided for SMEs and women entrepreneurs to be able to trade, and their ability or the frequency of their use from the women themselves. So I'll just give you a bit of context, and then I'll hand it over to my colleague Agnes. So we are sort of working in this context of the Africa Continental Free Trade Area Agreement, which is the largest free trade area in the world by membership. It's 54 countries, 1.3 billion people, more than 2.5 trillion US dollars. And the agreement addresses both tariff and non-tariff barriers to trade. So of course, the participation of women and of SMEs is critical for the success of this agreement, especially in the African context, where they make up a large part of traders, especially cross-border traders. And of course, trade finance is a critical factor that affects their ability to participate in the agreement. So we want to ensure that women can also leverage the benefits of the agreement. And we also, as I said, found anecdotal evidence on the gap between the financial products that are available for SMEs and their access or their use by women-owned SMEs. So particularly in Kenya, this is something that we found, and we found that women-owned SMEs reported far greater challenges than men-owned SMEs. And so we wanted to investigate this further, again, in this context of seeing how women-owned businesses can leverage trade, particularly intra-Africa trade. And so the project that we looked at together with GBS Africa was to understand what are these barriers from the demand side. We found a lot of evidence in literature on the supply side, but we found a gap on understanding the demand side of these barriers. And so that's why we embarked on this research and with the objectives of looking at these barriers, the underlying factors that might contribute to this inequality. And also really, this research is more exploratory in this stage. So similar to the IFC research, it's indicating to us where to look further and contributing to motivating us further on further research areas. So what we'll present here is more indicative rather than conclusive, but it gives us a good idea of where we might want to look further. So Agnes, I'll hand over to you to present the methodology and the findings.
Thank you very much, Nadia, and thank you, WTO and Anusha and everybody else for hosting this. And Teresa, you asked us what motivated this research. And for us, we looking at the bigger picture of SCFTA and hoping that countries are prepared, businesses are prepared to participate in this trade area. We looked at Kenya, and given that Kenya ranks very highly in financial inclusion, Kenya is well known for digital finance, M-Pesa. So we thought our findings will help us understand how the other markets will look like. So research methodology we employed in this research included a review of literature on the factors that influence access to trade finance by women.
So excuse me, Agnes, would you mind please speaking up a little bit, because some of the people are not able to hear.
Sorry.
Maybe can you lift up your voice and tell us, because we want to hear what you want to say.
Super. So thank you. I started by saying thank you to everybody and really in agreement with the speakers who've gone before me that it's important that we look at the gender gap in trade finance, and why Kenya for us was particularly, we thought that Kenya is quite advanced in terms of financial services, financial inclusion, and we wanted to understand whether this reflects when you come to women in trade, access to trade finance for these SMEs. So the research methodology we employed included a review of the literature to understand some of these factors that influence access to trade finance. We used a quantitative, so we had a survey that was sent out to about 100 businesses. We worked very closely with some of the business association in Kenya, including the Kenya Chambers of Commerce, KEPSA, and this gave us access and also credibility, right? We had hoped to also look at qualitative data. However, due to challenges posed by the pandemic, this research was done in 2020, beginning of 2020, 2021. So we were not able to use a qualitative method, but we sent out a survey to about 100 businesses, and this is what they told us. Nadia, the next slide. Sorry. So the profile of our businesses were mostly SMEs, as you can see that. Most of them, as you can see, surprisingly were in manufacturing sector. And when I say manufacturing, these will be women adding value, say, to a product, packaging it, and sending it across the border. So out of the, we were quite surprised to see that most of them are from the manufacturing sector. Annual turnover, mostly you can see they're quite small, from 10,000 USD per year up to about 75,000 USD annual turnover. So pretty small in terms of scope. And what these women told us was, so confirming what the literature says, that women struggle to access trade finance. There were factors, underlying factors, which included collateral, as Natalie highlighted, lack of information, lengthy procedures, lengthy processes by banks requiring these women to complete the application. And it also took time for the responses from the bank. And as you can imagine, these are SMEs, time is of essence. And so therefore they didn't have that time to continue to do all this, and also that they didn't have an idea of what to do. Again, most of these businesses operated in industries that are less capital intensive. I guess maybe the financial services didn't see value or thought that they didn't qualify for financing. And also from our finding, we found that most of them were not aware, even though they had a bank account, maybe a personal bank account, they were not aware of some of the services or products that are available from their banks, and so therefore turned to other sources of financing to fund their businesses. Again, the annual turnover was not a determinant for the applicant's success. So it didn't matter whether you earned 75,000 per year or 20,000 per year. So that wasn't it. This was the perception from the women. Remember, our focus was just from the demand side. They didn't feel like the annual turnover was a determinant. Also, findings of experience of women entrepreneurs contradict the view that there is no gender bias in assessing application by suppliers of trade finance. Suppliers of trade finance tell us that they base their decision on profitability and risk. However, women felt that, and I say this is their perception, that they were already excluded, and there was bias, there was gender bias when it comes to trade finance application. I mean, all businesses struggle to access finance, and that is common across not just in developing countries, but everywhere. But we found that women, based on the underlying factors that we highlighted, collateral, lack of information, lack of network, some of them having, they're women, particularly in our part of the continent, are viewed as homemakers. Well, they felt that there were more challenges. So these factors, we felt, impacted the outcome of their application. Some of the barriers, we asked the women what they felt were the barriers to for their application or for their access to trade finance. As you can see, a majority of our respondents felt that trade finance, just really confirming what Natalie and what research tells us, that trade finance is by far the biggest barrier to their trade. As you can see, 87% of the women sampled were rejected on application. That certainly confirms that there is trade finance is a challenge, but also that there is a bias when it comes to men and women. Where did these women turn to when they were rejected? Friends and family were, most of the women told us they turned to their friends and family in formal cooperatives. Kenya is very well known for circles or cooperatives. These also provided a source of finance for these women. I think for me, this was an indication that there is an opportunity for suppliers of trade finance, and there is a business case. Maybe going back a little bit, I think a study by the Kenya National Bureau of Statistics confirms that 48% of all businesses registered in Kenya are owned by women. So you can imagine if most of these are turning to their friends and family or to informal sources of financing, imagine the value it would be for the suppliers of trade finance. So this, as Nadia said, this was just a pilot study. It has given us a motivation to try and further research to cover more countries, and what we learned also, apart from the quantitative approach, we are also going to employ a qualitative approach just to make sure that we have credible data, and hopefully we can come back to share more once we've completed the bigger research we've embarked in. I'll invite Nadia to share the recommendations and the way forward.
Thanks, Agnes. Yeah, so I think you can see some of our recommendations are similar to what Nathalie has shared based on the IFC preliminary findings. There's a role at the policy level, and we see some women have reported as well that sometimes policies have been able to support them, for example, in terms of credit guarantees. It's similar to business associations, but there's more that, of course, can be done at the policy level. Of course, business associations have a role in providing access to information and advocating at that policy level, in providing access to skills, encouraging public-private dialogue. And then women-owned SMEs, of course, can address some of these challenges relating to financial literacy, these misconceptions, and of course, seek further information. And we've heard during the session so far a few examples of how supportive organizations are helping women in accessing information. Then, of course, legal and regulatory frameworks often exist, but they're in its implementation. In their implementation, we can have gender equality taken into account better, and also improve their implementation. Banking and financial service providers can be better, perhaps, about their messaging, but also use some innovative mechanisms. And we did hear anecdotally from some banks who are looking at other types of data, for example, big data or mobile money payment histories, to be able to inform the creditworthiness or riskiness of a given business for trade finance. And they can also mainstream gender considerations in their work. Similarly, research and academia can conduct research, as we are all doing on this topic. In terms of what the way forward is, so I think we've seen that the study, we've said the study is indicative and raises a number of areas for further investigation. So, for instance, how can we overcome the issue of collateral? Particularly in the African context, women have limited access to land rights, which impacts their ability to use property as collateral. So how can we overcome some of these challenges? Agnes mentioned a finding that women tend to face more underlying challenges to accessing trade finance in terms of some of those factors. And the research did actually survey some men-led SMEs as well. So we were able to compare, though the sample was small, but indicative of the gap narrowing with higher incomes. So is income a factor in bias? We also have a program that's looking at training women fund managers on how to be more gender sensitive in their approach. Does that work? Does it work to have more women in decision making in those funds? What do support programs look like for SMEs when supporting them to fill out some of these paperwork? So this research really gives us some areas to look at further, particularly, as Agnes said, on the demand side. And we'd like to also follow up on some of the innovations that we've heard from these SMEs. And we'll hear from Francesca a little bit later on some of the ways that she's been able to overcome barriers to trade finance. So how can we investigate some of those innovations and leverage them? And of course, this is leading us to larger scale research on the continent on barriers to trade finance for SMEs in the form of a quantitative survey, but as Agnes said, also doing qualitative research in selected countries. And we'll hopefully be able to look at the best practices in public, private sectors, in the financial sector, in civil society, and business associations on overcoming these barriers and what that support system looks like. But of course, in the larger context, again, looking at how women entrepreneurs can participate fully in the implementation of the Africa Continental Free Trade Area. What does this look like, for instance, for traders who currently trade informally? And how can they participate in the agreement? What is the relationship between being able to trade formally, digitalization, having that payment history, and being able to access trade finance? And so we're looking at some of these newer areas along with partners that are working on the implementation of the free trade area. And we're excited to continue our research and hopefully have more updates for you at the next gathering. Thanks, Teresa.
Okay, thank you, Nadia and Agnes. I'll just make a very quick summary of a couple of things that Agnes said, because a couple of the people couldn't hear very easily. Basically, Agnes, you have shown that there is a gender bias in the institutions when they are giving out trade finance, a bias against women. And I would encourage everyone to have a look at their report. It's beautifully presented and easy to read, and you will find a little statistic there in support of the arguments you're making. And if ever anyone says, why do we have to think about trade and gender? Going back to the Netherlands ambassador, isn't it all gender neutral anyway? That wasn't what he said, but some people still think that. No, it isn't, and you've got an instant statistic. You've certainly got a clear idea that there must be plenty of transactions, potential transactions that are missing. So we move on now to the so-called practical part. And here I will turn to Sonia Kelly from Women's World Banking. Sonia, you've been working with women entrepreneurs and trying to understand the gap in access to trade finance. Would you like to tell us a bit about what you've been doing on that and the financial inclusion and ways that are able to help overcome the gender bias and to enable women entrepreneurs to have access to trade finance on an equal way? Sonia, the floor is yours.
Yes, thank you so much, Teresa, and thank you to Ambassadors Valencia and Beckers and to the World Trade Organization. This has been such an enriching conversation. I'm so impressed with the level of research that we've seen here today, and really excited as well about the work that's being done and the potential for women's financial inclusion and economic empowerment, particularly in trade. I'm going to go ahead and take that awkward moment to figure out how to share my screen here. Great. And please let me know if you cannot see my screen. See my notes as well. And well, since we've had some challenges with sound, let me just check on my sound quality here.
It's good.
Okay, fantastic. Wonderful. Well, let me just start out by saying we at Women's World Banking are not experts in trade, but we are focused on women's financial inclusion and economic empowerment. And I think some of the themes that you'll see in what I'll present today from our research are echoes of what we just heard in the last two presentations. And so that's always wonderful when that happens because it confirms some of the observations that we're making. And Teresa, you're doing a great job of tying it all together. So first, let me just set a global context for financial inclusion. There are 1 billion women in the world who lack access to formal financial services. We can also point to inequities in finance in the 9 percentage point gender gap in financial access that has remained at 9 percentage points over the last decade. So that gender gap has not been closing as we would have hoped it would. It's also a $1.7 trillion US gender gap, credit gap among SMEs, and that's thanks to the IFC SME Finance Forum that we have that figure. And then there's also a 15% gender gap in smartphone access. We heard from the ambassador towards the beginning of this session that focus on digital and digital as a great enabler of women's participation in economies. But if we continue to see inequities in access to digital services and also in internet connectivity, we might see new forms of exclusion with digital, and that's obviously a concern. Women's World Banking is a global organization that provides advisory services, research, policy and advocacy, asset management and leadership, and gender diversity training. I like to say we do whatever we can or whatever we need to advance women's financial inclusion for the goal of economic empowerment. We had a chance to look at the 2021 to 2026 action plan on trade and gender. And we internally at Women's World Banking shared it around. We're celebrating it. We think it's fantastic. And we see a lot of shared challenges to building the evidence base for women's economic empowerment in the financial inclusion space and in the trade space. And these challenges come out, as we just heard in the last conversation, when we look at financial services that enable trade, like credit for trade. And these challenges include lack of sex disaggregated data, hidden gender biases in existing systems for entrepreneurship. So for example, bias against women seeking credit in Kenya, building on the last presentation, which is kind of ringing in my head, but in Kenya, in many institutions that are providing finance to formalized businesses, they need 3 years of audited financial statements in order to provide a certain level of credit to entrepreneurs. And that means a level of formalization and business capacity that a lot of women just are unable to provide. There's also reluctant partners. I think a lot of times when Women's World Banking comes in and we say, women's financial inclusion, what financial institutions hear is corporate social responsibility. And this is sort of a mismatch in the assumption that we're coming in and saying women are investing in women and providing finance to women is good for business. It's part of the business case, and you're missing a market opportunity. But on the other hand, I think there are some assumptions that there is a lack of a business case to lend to women entrepreneurs, and that's a big problem. And then finally, this distance between the development community and end users. And this is one of the reasons that I'm so glad this conversation in particular is happening, because we, in this conversation, we represent a diversity of perspectives from within the development community. But next, after me, and I'll try and hurry so that we can get to her quickly, you'll hear from a woman entrepreneur about her experience as well. And so reducing that distance between the development community and finance community and end users is critically important. We also have shared goals in the financial inclusion and trade space. And I'll read this quote directly. I know that's not PowerPoint etiquette, but I think it's a really good one from UN Women. Empowering women in the economy and closing gender gaps in the world of work are key to achieving the 2030 Agenda for Sustainable Development. Labor force participation rate for women aged 25 to 54 is 63% compared to 94% for men. And women are overrepresented in informal and vulnerable employment. When more women work, economies grow. I think this is also a unique moment, and building on the ambassador's comments at the beginning, this is a unique moment in part because of COVID-19. You know, we have a very long list of negative impacts of COVID-19 on the world. But I'd say one of the positive byproducts of COVID-19 has been increased digitization because of early assumptions about transacting in cash and spreading the virus that were, misguided assumptions, but correct assumptions about in-person engagements. We saw this mass shift of digitization, especially for entrepreneurs who were not connected digitally. We saw a lot of businesses shift to digital with COVID-19 restrictions, a huge boom in e-commerce activities and social commerce activities on social media platforms. We also saw cultural shifts in women's ability to access digital devices. So GSMA, the GSM Mobile Association, showed that women's role in their families in technology meant that women got access sometimes for the first time to smartphones and other tools. We also saw reduced mobile gender gap, which is really exciting. But these digitization trends have not necessarily resulted in digital financial services. in part because of a lack of basic access to digital financial services and mobile money. Women are more likely to have a feature phone than men are, and men are more likely to have a smartphone. We also know that women show low digital financial literacy. There's also inadequate operability between systems. So women who are engaging on e-commerce or social commerce platforms for their businesses have like very complicated ways of connecting their financial services to their digital tools. And then finally, a lack of understanding of women's unique needs. I think this is so key, that women have unique needs and preferences associated with their financial services. For example, women are much more likely to prioritize privacy in their financial services than men are. Let me turn now to a case example, and I'll share this report in the chat so you can take a look at it later. I'm also very happy to submit it to reach that goal of 100 publications with the WTO. But for the last 4 years, we've been partnering with Kenya Commercial Bank. We partnered with them from a technical assistance perspective to optimize financial and business support services to women-led micro, small, and medium-sized enterprises in Kenya. So it seems like we have a real focus on Kenya today. We then accompanied this technical assistance with a research effort that evaluated program effectiveness in reaching women's business goals and women's economic empowerment. And we published this in 2020. So let me tell you the 4 parts of technical assistance that we moved forward with KCB first, and then I'll go into the research results. The first part was relationship management to foster relationships with women-owned SME customers. And this required some retraining of loan officers and breaking some social norms, frankly, because loan officers are more likely to be men. The second was non-financial business support services. So KCB was offering finance, but there are lots of other non-financial support services that they could offer and were offering for a limited set of customers. And what we did was just talked about expanding those. So for example, for women leaders of businesses or women owners of businesses, there's a special club, like a CEO club, that people could join. And we recommended reducing some of the barriers to entry to this club to make sure that women could be part of it. Third was a different credit scoring methodology. And my colleagues in the last presentation mentioned alternative credit scoring methodologies. This is increasingly important given COVID-19 reducing the ability of financial services institutions to be able to predict the creditworthiness of entrepreneurs. And so we implemented, instead of what I mentioned at the beginning, this requirement of audited financial statements, which means a level of formalization that women-owned businesses are less likely to have than men-owned businesses. We implemented a cash flow-based credit assessment methodology, which meant looking at the P&L statements for businesses and sitting with businesses and looking at their ledgers and looking at their cash flows and lending based on cash flows instead of audited financial statements. And finally, strategic gender awareness and focus. And this one is so important because it's so easy for all of us to have unconscious biases against women. And I say all of us because it's not just men, it's also women. And so to be able to conduct trainings with loan officers and with staff about some of those biases was tremendously important in the solution. So moving now to the results. We did this with 3,676 entrepreneurs. The value of the loans dispersed was 10.8 billion Kenyan shillings. The net profit loss was very, very low, which KCB was thrilled about. what was important in this as well, and one of KCB's goals, was accounts opened. And you'll see this massive difference between the total loans dispersed and the number of accounts opened. That's because a lot of these solutions that we deployed were not just to new entrepreneurs receiving credit, but existing business customers of Kenya Commercial Bank who had a loan but were banking, like had their accounts somewhere else. And this is tremendously important because this is what shows the business case. For Kenya Commercial Bank, the number of accounts opened was huge. Like they actually were able to increase engagement among people who were already receiving a loan that they wanted to move their banking over to KCB. Our goal, as I mentioned earlier, was women's economic empowerment. And this is how Women's World Banking measures women's economic empowerment: through material change, cognitive change, perceptual change, and relational change. And so these were some of the things that we measured in the evaluation that we did, in addition to the sort of balance sheet and growth indicators. So because of time, I'll be very choosy in showing results here. And you can, again, I'll put the paper in the chat so you can go back and look at the full results. But first, women entrepreneurs reported an increase in their decision-making activity. This was one of the things that we looked at in our measurement of economic empowerment, was women's decision-making activity. So we had kind of a decision-making activity index that we put forward with a certain number of questions that we asked about who makes decisions in the business and under what circumstances. And women's decision-making activity under that index that we put in place increased by 14 percentage points, where men's remained relatively the same over time. And this was not a women-only solution. Like, this was a solution that we designed with women in mind, but that was used across the portfolio. And so we thought this was really significant and interesting. We heard from a number of people in the research that we did that they felt like their technical expertise, that women felt like their technical expertise was increased because of their engagement with loan officers, and also because of their engagement in training sessions and in this club that I mentioned called the Biashara Club. We also heard women saying that they appreciated that the trainings that were offered increased their sense for flexibility. So women said that they liked learning about how they could operate a business while they're away through digital ways of managing their businesses. This is so key for women who we know empirically have increased care responsibilities, especially under COVID-19, and prioritize flexibility in their work more than men do. And so this digitization offering increased flexibility is really, really critical. So again, I'll put the link in the chat. I'm happy to take questions, but I think all of these findings really underscore, one, the importance of investing in women, two, the business case, and three, some of the linkages we can make between financial inclusion and trade, finance, and access to markets. Back to you, Teresa.
Thank you, Sonia. Excellent. We now turn to Francisca, who is our entrepreneur. First of all, Francisca, let me say very welcome to you to being here with us today. I think that researchers like me often spend too little time listening to entrepreneurs such as yourself. So we're delighted that you've taken, that's usually because you're very busy, so we're delighted you've taken time to be with us. I'll just, by way of introduction, I'll mention that you have a range of skincare products, and you also deal in business-to-business supplies of bulk ingredients for cosmetics. But today we're asking you, would you like to tell us a bit about the hurdles that you've faced in getting access to trade finance, and the ways that you've sought to overcome those obstacles. Francesca, you're welcome. Over to you.
Thank you so much. And to the viewers, good evening, ladies and gentlemen. It's a great pleasure to actually be here in this panel of women who are experts in trade finance and things to do with it. A background about us, Teresa, as you've said, we do manufacture value-added skincare products here in Kenya. We also support other businesses across Africa and the world to actually access raw materials to use for their value addition. And I'm going to share the on-ground experience as a woman in business. And I'm actually happy that what Natalie shared and what Agnes and Nadia shared, and also what Sonia has spoken about, reflect literally the reality for us on the ground in some of the areas. So first, I'd like to just share the 3 barriers to access to trade finance that we have experienced, and I think other women have experienced through our conversations with them. Number 1, on the ground here, collateral expectations are still a bit traditional. So let's say you go to borrow or seek assistance for trade finance, and then the bank tells you, would you like to give your vehicle, or do you have an apartment complex or land that we can hold against this deal that we could support you in? And I think the second barrier to trade finance that we've experienced is that with the finance institutions, rather the banks that are here, some of the loan officers, if not most, do not receive training on trade finance. So you'll find that from our experience, let's say someone is promoted or transferred from the consumer loans department, and then they're moved to the trade finance desk. And so when they do not have that proper training that would make them understand business needs as regards trade finance, because Teresa, as you said earlier on, trade finance is completely different from what people would rather think of, let's say, in terms of lending. So I'll share an experience later on how we lost an opportunity because of this information gap. And the third barrier to trade finance, I think, is the pure fact that some of us do not even know that these instruments exist in financial institutions. So, and this is maybe because of fear of, what if after I get this trade finance instrument, the tax agency comes at me to take some of it before we're done with the deal. And it's just purely some of us do not have information that this kind of help is actually out there. And so they'd not be able to access this kind of help that is really, really necessary in terms of pushing their products forward or pushing a very significant trade deal forward. And I'll now move to a relevant experience that we had. So a few years back, when we just started off, we got contacted by one of the major commodities exchange trading companies in the world. And they're quite, I think, if not number 1, or they should be number 2. So they came and sent a representative to speak to us about supplying them with cocoa beans, or other people call it cacao beans. And they wanted to use the cacao beans as a means of hedging away risk, price risks or future price risk, because they're a commodities exchange entity. So we excitedly went to a bank which has a Pan-African presence. So we felt they would know, they would embrace this with 2 arms. They're our bank, actually. And we met with high-level management, and the first question was, what's cocoa beans and what is it used for? So we had to explain, it's used in confectionery and chocolate. And when we say chocolate, they just felt like, oh, that's candy. That's just like child's play. Like, how can we fund such a thing? So we had to explain to them that in commodities trading, you can hedge away risk by having physical possession of the actual good to protect yourself from futures price risks. So they told us, okay, we'll get back to you. So they took about 48 hours and got back to us saying, oh, sorry, we can't support that trade because we do not know what cocoa beans are. And we cannot understand why someone would need this. And at the time, I think on a monthly basis, the contract we would have to supply them for 24 months. And the minimum value was about $200,000 per month. So they were courteous to actually refer us to the investment corporation, which is owned by the government. And they told us, fine, but can you give us like tractors and land and again, machines, so for us to hold that you're going to pay this? And we said, well, we can't do that because the client had actually come and was part of the meetings, and they promised to pay through LC, and they were ready to go all the way to at least securitize the trade deal even further. All they needed was just to build a rapport for maybe 6 months. We supply for 6 months. After that, we would come off of the trade finance help from the bank, and then we proceed to now be doing the deal directly with them. So in the end, we had to just let go of that opportunity because the financial need for it was a bit on the high end. However, the trickle-back effect it would have had in our economy, it was going to be really huge because we would not only source from Uganda, but we would also do part of the processing here in Kenya before exporting it out to the said entity.
Francisca seems to have frozen.
So from the deals that can you hear me?
Yes, I think we lost you for a moment. Please carry on.
Sorry. Okay. So I was sharing on the lessons that we learned and what we did in regards to the lessons learned. So we bootstrap a lot. So out of the revenues that we get, we set aside funds to actually buy in anticipation of what we sell the most. Second is something which was actually reflected, and I was really nodding at it. Approach family to support you because I mean, they can set the terms of the support, but at least it gives that clear understanding that, you know, you're an entrepreneur and you need to get this deal through, and they'll not pressure you with, you know, maybe panicking that your vehicle is going to be taken in 2 seconds, you know. And third thing that we do, and this has worked 100% of the time, and I'd recommend anyone who's been rejected to apply this, just be honest with the client, you know, just, you know, don't flex muscles that you do not have. So if the finances are not there, just reflect that back to the client. This has helped us a lot because I sat down one day and imagined that for this client to get to their high revenue levels, it means that they possibly went through the teething problems that we're experiencing right now. And so we're usually honest. We tell the client, like, if you want, let's say, maybe 50 metric tons of cacao butter, or maybe 100 metric tons of coconut oil, or 200 metric tons of glycerin, please come to Kenya, know who we are. You know, you can be part of the transaction, you can be part of the order fulfillment. We only ask that you pay 50% or 60% of the invoice value to enable us to maybe take care of the admin and the purchasing and putting the order together. And then the other remaining percentage, once we finish with the export documentation and everything is in check, we normally tell them to clear before they fly out of the country. This has really, really helped us to manage through the hurdles. So I think that's all I can share today, unless anyone else has anything to add in. Thank you.
Thank you so much, Francisca, for sharing your experience. I'm truly sorry you lost that big deal, and I hope that you get another one in the future. And it was good that you can fall back on family. Maybe that's what we all do from time to time. And thank you for the recommendation on how to deal with the client. I think openness is always the best policy, and I wish you lots of luck in the future. We now have about 10 minutes for questions. The questions, I believe, can come from anyone in the audience and can also be addressed to any of the panel members. So I think, do we allow the audience to raise their hands, or Anush, or is it only questions within the panel? Because I can't see the audience.
Right. No, I think we can open the floor as long as it is questions mostly.
Okay, so if anyone is having a question, it's only a short question addressed to a panel member. We can't take comments in this short space. Sorry, Anush. Go ahead.
And there are 2 questions in the Q&A, which are unanswered from Jane Koinek.
So do we want to take the questions in the Q&A? I believe that those are more detailed questions that are getting some written response to, as opposed to a verbal response. But
why don't we open the floor and then
I think open the floor. I think the Q&A questions are quite detailed, but thank you, Jane, for those. But if you do have a verbal question, Jane, please let me know. And I think someone else has to open the floor, someone who's managing the meeting, if we are taking something from the floor. Okay, let me start with an easy way. Do we have a question from a panel member to another panel member? Whilst we work out how to open the floor.
This is Natalie. I think there was a question on how do we help financial institutions identify this big business segment. And I thought maybe Suzanne from IHC could address that and comment on her experience on this topic.
Thanks a lot, Natalie. Sure, I'm happy to do so. It was actually a question that we saw from Jane in the Q&A section, which were the other challenges that we encountered when engaging with banks, other than that there is no disaggregated or very little data within our banking clients. And a couple of things that we can highlight, and I'm sure, and I've heard already that Nadia and Agnes and Sonia came up with kind of the same conclusion. So apart from the lack of enough disaggregated data, it's very hard for women-led businesses to comply with the collaterals and guarantees required from the banks, because banks tend not to distinguish between what their customers need for trade finance versus what they need for classical loans and debts. In general, it's short term, it's a small ticket size, and therefore the usual requirements are very difficult and very hard to comply with, as Francisca already told us a little bit, right? On top of that, they have to encounter, very unfortunately, in many situations with biased bank employees who are handling these first requests. So it's very hard to get over that first wall of defense, I would almost say. And there, the legislation is one important point, right? It's clear, and it was mentioned as well earlier today, that in some countries, it's more difficult for women to get grip of these collaterals, lands, assets, real estate, than it is for men. So we have to be conscious of that. If we compare that to the difficulties that men-led SMEs are also encountering. And then perhaps last but not least, the banks who do have a comprehension of the attractiveness of the commercial segment of banking on women are often offering programs, but not particularly focused on what this segment is of trade finance, of banking, of women who are actually doing trade. So these are the most significant things that we found, Jane, and I hope that I have addressed your questions, and I'm inviting our fellow panelists to also answer that one. Thank you.
Thank you, Suzanne. I think there's an interesting dialogue happening there. I see we have Anush with her hand up.
Thank you, Teresa. Actually, I have a question for the panel, but also maybe more targeted to Francisca. I was wondering, what about COVID-19? Are you integrating this element into your research, and has it worsened access to finance or trade finance? What is the impact of COVID-19 in that regard? Thank you.
The impact of COVID-19 is that it's had on us, from my experience, is that the financing institutions became a bit more risk averse than the usual. And so COVID-19 was like, I think, the biggest resistance test in terms of business model stability. To a great advantage, I think that because of, let's say, I don't want to call it hardship, but because of the challenges around, let's say, growth, organic growth that we experience in business, we formed some form of resilience through the models that we used to institute as business continued to grow. So during COVID-19, when it started, I think we actually performed even much better than expected because the business model was built for resilience. But I think on my observation through even a meeting I had as early as January, banks are very, very risk averse right now.
This is Natalie. I want to add another perspective also, is that women have been very distracted from their business because of additional tasks that they had to take on, much more so than men. You know, when schools were closed and they had to take care of the children. So clearly we unfortunately have seen an impact, not specifically on trade, but overall on women-owned businesses. It's definitely been a step back that we're hoping we can compensate by providing more support to women-owned businesses.
Yeah.
Thank you, Natalie. We had a question from Simonetta in the chat, so I'll just read it out, which is, what about using the record of e-transactions as an alternative to traditional collaterals? I know that Sonia had something on that, which is answered in the Q&A, but would anyone else like to mention anything on that? It's basically about alternative collaterals.
Teresa, if I can, perhaps respond to the first question by Anush on COVID-19 impact. For us, when we were doing our research, was during the COVID time, and we realized for most of our businesses, logistics issues, our borders were temporarily closed. So priority was how can I move my goods from point A to B, and also the added responsibilities at home. So it was such a disruption for most of the businesses we spoke to. However, as we were speaking earlier, they were very innovative and creative, finding ways of moving goods from A to B, but still finance and access to trade finance became even more harder. So I guess for us in the next part of our research is investigating further on exactly what the impact of COVID-19 was. But logistics, border closures meant that they couldn't carry on as they would normally do. In regards to banks becoming more creative, digital, using e-transaction, I guess maybe from my perspective, we haven't started speaking to the supply side, but Kenya's experience, banks and financial institutions are trying. They realize there is a business case for women in trade. They are innovative, but they certainly have not been able to access, particularly the smaller SMEs in the informal sector. It's still a long way. They can innovate, yes, but what about that small business that has no access to e-commerce or access to digital ways of doing business? So it's a long way to go, and I think I'm really pleased that we focused on Kenya. We think Kenya is quite advanced communications sector, advanced financial services sector, and yet our businesses are telling us, despite all these efforts both from government and financial services, we still struggle to access trade finance. So I guess maybe this conversation for us is what are the practical solutions do we come up with to address these issues? We know there's value not only for the supply side, but there's value for the economic development of our countries if we support our women SMEs and we support women SMEs access trade finance so they can do their business.
Thank you, Agnes. I think that's really kind of a great closing remark, I think, from this part of the panel. It seems like it's not the end of a discussion, but the beginning of a discussion. If I go back to what I thought about at the beginning and this idea of some sorts of missing trade, that there needs to be more work, more conversations, leading to more trade. So I think I would like to wrap up this part, keeping to time to wrap up this part of the discussion and hand back to Anush. Thank you all the panelists, and thank you for everyone who kept very, very strictly to time, and see you all again for the next part of the dialogue. Here we go to Anush.
Thank you, Teresa, and thank you for everybody for their great presentations and inputs. You know, I can really commend you on such substantive presentations, and I really learned a lot today. Before I go to my 2 points, sort of takeaway or ideas to broaden the discussion, I would like to say that all this would not have happened without the commitment and dedication of my colleague Lolita Lapin-Forget. Lolita, please put on your camera. Show your face. Excellent. So Lolita is my colleague. She's been working with me for quite a while now. And she's also the vice chair of the Gender Research Hub. And she really made this event a reality and a success. So I can only thank you, Lolita. So to my second point, to my 2 takeaways and ideas to broaden the discussion. The first one is that I think we've learned today, we've seen evidence that women lack access to trade finance, and it is a key obstacle to trade. This is in line actually with what women entrepreneurs are telling us today. But looking at finance issues more broadly, we can see also, and this has been also a theme towards the discussion, that access to just finance, I would say, is a key obstacle identified by women, I think, across continents. We've done in 2019 and 2020 at the WTO some surveys regionally in South Asia, East Africa, and Latin America, and we see that about 60% of women entrepreneurs identified access to finance as a key obstacle. And it's not just an obstacle for business. It's not just a business obstacle. It's also a trade obstacle, because trade can be costly, not just in terms of the niche aspect of trade finance, but just trade in general, because women have to pay for, let's say, packaging, certification. They have to comply with standards. They have to have skilled staff in trade or trade rules or customs regulations. They have to have specialized IT systems. They also lack knowledge on trade rules, and that knowledge gap is also another cost. I've seen women, for example, losing business due to their lack of knowledge, because they were relying on their business partners for information rather than looking at it, where it should be found. So, and we've seen that also the lack of finance has been exacerbated by the COVID-19. We've seen a lot of women that have been, closing their businesses or losing their businesses because of the pandemic. And in addition to that, women have been de facto excluded from the financial relief schemes set up by governments because of 2 requirements that were too dire for women to abide by. So here I will also talk about e-commerce. I mean, maybe I will say things a bit contrary to what Sonia has said, but I think it will be completely complementary, if I may say so. I would like to say that very true, e-commerce is a solution to access markets. We've seen that, for example, we have data from Canada saying that women that are involved in online trade earn 75% more income than those who are not online. So I think that this is very This is very true. We have evidence about that. And we've seen that in the COVID-19 that a lot of women have transformed their businesses from offline to online operations. But trading online is also very costly, and it needs finance. Building your presence online is costly. You have to pay for marketing, data storage, data security, e-commerce software, domain name, SSL certificates, payment processing costs. All these, and it's just a small list. And we've seen the data from the WTO chair from Mauritius. They did a survey in Mauritius last year, and they found out that about 43% of women entrepreneurs were reluctant to use e-commerce because, first of all, they have little knowledge about e-commerce, but also it's too expensive. So this is something that I think we can also think about, how access to trade hinders trade operations for women. And often I'm told when I say that, when I talk about access to finance in general, often some people, trade experts are saying to me, but I know it's not a trade issue. Well, I think I just demonstrated that actually it is a trade issue. So my second takeaway is about data collection. I think the issue popped up here and there during the presentation. And this is, I think, a key issue in trade and gender. We lack sex disaggregated data, full stop. And then when it comes to trade data, it's quasi inexistent. And many factors explain this failure, I would say, in terms of there is a lot of lack of trained statisticians, lack of resources to conduct extensive data collection. So here we see the importance of interministerial and interagency collaboration. The issue is simply not integrated in the statistics package, even for countries that do collect sex disaggregated data. They often do have data on labor market or entrepreneurship, but not so much focusing on trade. We can see, for example, in Canada, they have also the issue during the COVID-19, where they collect all these data, they know where the women entrepreneurs are, and still when they set up their financial relief scheme, they left them out, de facto, obviously, because of the requirements to say that the financial schemes will go to companies and that have employees. And the data in Canada is saying to us that a bit less than 50% of women entrepreneurs are self-employed and they don't have employees. So it's also a fact that, not just getting the data, but also using it for trade policy. And I think this is something that WTO members have been discussing in the last year. They've been exchanging on data collection methods. And here in the WTO, we have developed a data collection questionnaire for governments that they can use as a guidance, and has been incorporated in our trainings that we provide on trade and gender for government officials. This is definitely in line with the declaration, the joint ministerial declaration on trade and gender equality that members will adopt at the 12th ministerial conference in June this year. There is an important element where members want to take action in that declaration is improving and enhancing data collection. So all the work we do here at the Hub is really in line with the needs of WTO members and governments. And I would say also with the needs of women and women entrepreneurs. And I think that, with that, we can think about the next issues we want to focus on, and the next activities we intend to take. One last word. Again, thank you to all the speakers, and we will be in touch with you. Some of you are part of the Hub, so we are always in touch with you. But the other ones, I would probably like to follow up after these meetings all together and think about how we can take this a bit further, or how we can have some positive and concrete outcomes of this discussion. So we'll get in touch. Stay tuned, and thank you again for your presentations, and thank you for the participants for listening in. with us. Thank you very much.
Thank you and goodbye.
Goodbye.
Thanks a lot. Goodbye.
Thank
Thanks,
you. What a
everyone.
pleasure.
Thank you.
Thank you. Bye. Bye.